Development Bank, one of the custodians of the Qatar FinTech Hub and its programs. And I would like to welcome you to our Angel Investment Masterclass, one of the offerings and one of the initiatives that we conduct in every wave within our incubation and acceleration program. This masterclass actually comes in an important time for our startups, given that they are about to conclude their program with the Qatar FinTech Hub, and it will be the graduation of the Wave 3 within the Qatar FinTech Hub. And it's also important as the investment within the angel investment sphere or the venture capital in Qatar and the region getting the momentum. So to start with, I will share some insights and some background about the performance and about the development of the venture capital industry in Qatar. As I mentioned, it's getting a great momentum. So if we notice in the last 2 years, we have seen tremendous growth on the venture capital investment in Qatar. So from the year 2019 to 2020, we have seen a growth that's close to 6% between both years, and from 2020 to 2021, the results are not yet announced, but we have seen a growth to more than 40% between 2020 to 2021. We have seen great integration between all ecosystem players. We have seen also great contribution from the acceleration and incubation program in the country, as they were responsible for 33% of the total funding in the venture capital industry. And this put a great emphasis on the important role of the incubation and acceleration program to build and to help the existing company build their own startups, and also helps the international companies who wish to expand to region get the right tools to talk to the right partners in Qatar and in the region. The e-commerce over the last 2 years witnessed great growth and attention, and this is basically driven from the challenges that the world faced from the pandemic, COVID-19 pandemic. And we have seen the funding on the e-commerce got the biggest share over the last 2 years. So I wouldn't go too much on the statistics and on numbers. I would like to take you through the objectives and the outcomes, and why Qatar FinTech Hub and QDB specifically also is focusing on the angel investments masterclass and the development of the investment in this ecosystem. So the objective of this masterclass is, first of all, to deliver a capacity building session to the existing angel investors, or for those people who wish to become the future angel investors. Why do we say building a capacity? Building capacity is an important element in this activity, as there is a risk that is associated with the investment, and definitely there is a reward. So it's very important to help our entrepreneur, our angel investor, our individuals who wish to enter that sector to build their capacity, to give them the right tools to exercise their future investment activity. And from the other side, it's also important for our startups, whether they are in our existing cohorts or the startups who are joining us from other countries from the world, is also to understand how to talk and how to discuss and how to negotiate with the angel investors to onboard them into their venture. The next element is also to build the community and the network and the database of the angel investors around Qatar FinTech Hub, and to provide those angel investors a future access to our deal flow. It's worth to mention that today Qatar FinTech Hub onboarded more than 40 fintechs over the last 18 months, and we are still halfway through our program, and there are more companies to come in our pipeline. So it's important to consolidate and bring all these angel investors together to get access to these deals and these outcomes of the Qatar FinTech Hub. And finally, on the longer run, we are looking to increase and bring value in terms of investments to our existing companies and startups to help them grow and flourish in the region. So this is a quick introduction about the outcomes, about the scene in the venture capital. It's a promising sector that's witnessing a great growth, as I mentioned at the beginning of the session, and we are very soon will launch our upcoming venture capital report, which will present the 2020 results, and we will see a great growth on these results. So on the agenda and the coverage, if we go to the next slide, please. So today we have a great panel of very experienced speakers, whether they are entrepreneurs or investors. So we do have our colleagues are joining us from the 360 Nautica, from the N-Cube, from Listen Ventures, Els Lab, and finally from Riyadh we have Nama Venture is joining us, along with our partner operating the Qatar FinTech Hub, which is Ernst & Young. So I'll leave it to you guys to enjoy the upcoming panel discussion with our esteemed guests and investors, and off to my colleague Hilal to take you through an overview about the Qatar FinTech Hub. Thank you.
Assalamu alaikum. Thank you, Mohammed, and good afternoon all. Qatar FinTech Hub is a global FinTech hub with a purpose to support the development of the FinTech industry in Qatar. Qatar FinTech Hub aims to facilitate collaboration among the participants and stakeholders of the FinTech ecosystem and develop local and global relationships that will advance Qatar National Vision 2030. This slide is an important slide for us. Qatar FinTech Hub is a key FinTech initiative managed by QDB under the leadership of QCB. The vision of Qatar FinTech Hub is aligned with the goals and objectives set out in Qatar National FinTech Strategy. And now on left hand, Qatar FinTech Strategy was developed in 2018 to develop the FinTech ecosystem in Qatar and to provide the right opportunities, both entrepreneurs and products, to the consumers. In the middle, we can see the initiatives under this strategy. Based on this, in the strategy, multiple initiatives were planned and are being executed, such as incubator and accelerator, payment licensing by QCB, and easy commercial registration by Qatar Financial Center. These activities are aligned and supported by Qatar FinTech Hub, which has a vision to become a globally recognized hub, provide a platform to connect all the players, stay relevant to Qatar market, region and global market, run programs to attract international fintechs and support local entrepreneurs. Moving on to the role and responsibilities about the key stakeholders. Qatar Development Bank plays very important role in developing the Qatar FinTech ecosystem. QCB acts as a regulator and orchestrator. As an orchestrator, QCB acts as a flag and leading force of the national FinTech agenda, facilitated collaboration and overseas execution, and manage intra-government liaison. As a regulator, QCB acts as central regulatory authority, issuing laws to enable the FinTech strategy, operate FinTech sandbox, create FinTech risk management policies, and attract. QDB and QFC play as a sector developer and supporter of the national FinTech agenda, establish supportive environment for those FinTechs, financing, incubator, and accelerator. We have Qatar FinTech Strategy Committee to support overall FinTech initiatives in Qatar. It consists of major players of financial economy in Qatar. The next slide, we can see a snapshot of our waves. So far, the program has been really successful, and across the 3 waves, the program has received more than 1,800 applications from more than 75 countries. Currently, we are accepting application for wave 4. Wave 1, we focused on payment. 9 fintechs graduated from incubator and 10 from our accelerator program. In wave 2, we focused on emerging technology and financial services. And wave 3, we focused on embedded finance and tech fund. Application, as I mentioned, for wave 4 are now open and focused on next generation banking solution. You can visit our website and apply. Now I'll keep the floor to Muhammad for the next session.
السلام عليكم كيف الحال؟ I hope everybody's doing well and staying safe in these interesting times. First, I want to thank Qatar FinTech Hub, for hosting me and giving me the privilege to talk to you all, and Qatar Development Bank for making this happen, and also my brother Mohammed Ahmadi for exposing me to the Qatar startup scene. And hopefully, this is one of many sessions we'll do together and get to know this ecosystem even more and more. But on first set the expectation, we're calling it, how to angel invest. Look, there are so many ways to angel invest. I'll just share with you my own personal experience of what has worked for me, the good, the bad, and ugly, and from two different perspectives. So I was angel investing in both Silicon Valley and in the region. Maybe I'll give you a quick kind of brief on, my background. So I wrote my first investment check in 2006, but as a background, I'm an engineer, turned engineering manager, turned entrepreneur, failed and succeeded as an entrepreneur, then failed, by the way. Being an angel and being an entrepreneur, succeeding as an entrepreneur doesn't mean that your next entrepreneurial endeavor will work. So, we have the scars of war to show on our entrepreneurial endeavors. And then I started angel investing first as Muhammad, as an individual. And then, started networking in the angel investment scene until I was privileged to join Sandhill Angels, one of the prominent angel networks in Silicon Valley, where I deployed with them a bunch of, investments. I've probably invested in 65 investments as an angel, and some were actually in funds as an angel. The vast majority did okay. Some became, modest returns, and 4 were, unicorns that did very well. And most of that was really in Silicon Valley, but in the region, I made 12 investments, and then I transitioned, to venture capital. So, engineering manager, entrepreneur, angel, VC. So a bottoms up approach. In MENA, I also, co-founded Riyadh Angel Investors, which is an angel network that out here, and I was a member of Uqal for the longest time, since 2012. And I helped set up, or advised Women Spark, which was the angel network for Saudi women to invest in tech-enabled startups. So I just wanted to kind of give you a brief on the background. Now, in terms of angel investing, look, anyone can write the check. It doesn't, anybody can deploy. And I call this investing. I want to separate from investing from what is typically understood as angel investing, which is the special class of investing that I think is different than just writing checks. What makes a good angel investor? I would say the first thing is availability, showing up, being available to your portfolio companies, and making sure that you're adding value and you're participating. How do you add value? You add value by, as I said, your time, because you can have the best celebrity with you, as an angel investor, but if they're not giving you the time of day, if they're not engaging with you, if not sharing with you their knowledge, their network, their relationship, then they're not a value-add investor. And your job is to make sure you kind of engage them and get your money's worth. But if I'm speaking to the angel investors and that are listening to us, don't embark if you're going to be a passive investor. This is not the asset class. Invest in in other asset classes, but if you're not going to be available for your portfolio companies, I would not embark on this on this endeavor for sure. How do you start? You start by writing a check. I mean, I'm so thankful for my first investment in 2006 because it was the best 25K I've ever spent in my life, because I learned everything of what not to do when you angel invest. It was, 10 MBAs. So there's nothing like learning with your own money. So I want to make sure that this is the most important aspect. There is no better way to engage in angel investing than to angel invest. And along the way, you kind of pick the pieces and build your own method and way of investing. Now, I would highly, highly recommend that you do it as a group. Angel investing, because it's because of availability, because of the value add, is a hyper local activity. So at Sandhill Angels, we used to have the saying, we never invest 50 miles away from Stanford, because you want to be able to visit with your portfolio companies, look under the hood, etc. So make sure that the angel investors themselves, and I'm sure there's angel networks forming, and this is part of the the initiatives that we've Muhammad talked about, is the setup of these angel networks. Is investing as a group is a phenomenal activity. You get to share the due diligence, you get to discuss together, leverage each other's know-how, and somebody will have to step up and become the deal lead. So you build that confidence with among your angel peers to invest together. Now, if you're shy of, your capital is dear to you and you want to tip a toe before you get into this asset class, some invest in funds, get exposure to the asset class, to investing in funds and co-investing with the fund. At NEMA, we have many of our investors are super angels, and they say, look, if you pass through the NEMA's filter, let me know, I'll get to co-invest with you, or I'll follow on invest. So so NEMA is a pre-seed fund, so we're want to be that first investment check. So we kind of look just like an angel investor per se, but we're institutionalized. But you get to tip your toes, get exposure, leverage the funds you've invested into's due diligence, and get to co-invest or follow on invest. But that's if you want to kind of not ready to jump into it. But angel investment is one of those things that you best learn by deploying. Now, I want to make sure I set the expectations of how much you invest and how much do you deploy. There is no arbitrage in life. This is a high risk asset class. Most of your angel investments are going to fail, especially if you decide to do the pre-seed, seed, side of investing, where you're literally, at NEMA, we invest in team with complementary skill sets with an MVP, and they haven't got to the market. So we accept that risk because we know that if one makes it, it's going to make it big. So set the expectations in terms of success, failure, because in reality, all you need is one to make it. This is an asset class where if you come in very early on and you build your modeling, you just need one. I'm happy to say that from the 60, one of them had 2000x. It made up for everything that I've ever invested in this asset class, multiple times. So make sure that you set the expectation that not all are going to make it. And by the way, you're not going to have all the answers when you make the investment. So allow for the journey to teach you. And I now have a saying, if the investments I've made are still on the original business model, when I've made that investment, after 18 months, something is wrong. So startups will pivot, startups will morph. It's in the journey we gain insight, and it's in your journey as an angel. You'll learn and develop your own style, because it takes a long time. It takes a very long time especially if you're angel investing in the pre-seed, seed, to develop a liquidity event, to develop an exit. My unicorn took 9 years to make, but I'm okay. I'm okay with that. I've opted into this asset class with the full expectation of what to come. And I've had the ones that I thought are slam dunks, and they failed, and I thought the ones that would have a modest outcome became global 10 unicorns per se. So you don't know at the pre-seed seed, you don't know which ones are going to make it and which ones are not. All you can do is develop a conviction on the team, develop an understanding of what value you can add to help the better outcome of these startups. So make sure that when you deploy with understanding that this is a high risk asset class. So don't bet the farm on your wealth. Make sure, I mean, we would never exceed, if you're aggressive and, you're young and you have a big output, 10% of your investment wealth to go into what I call the smart Las Vegas, right? We don't know the outcomes, but if they make it, they're phenomenal. And there's a highly chance of failure, but all you need is one winner to make up for all the losers. That's the beauty of it. So, kind of be modest in your allocation. And, you go to MBA to tell you the portfolio asset allocation theory. We are in the alternative investments, in the private equity, in illiquid assets, in the riskiest of it, which is angel investing in the pre-seed. Now, some angel invest in opportunities in very late stage. And this is not the typical angel investing that is known by definition. But as I said, anybody can angel invest, or anybody can invest by writing a check. I'm talking about that particular stage in a startup's life where it's at earliest inception, where you're adding your network, your know-how, your knowledge, your time. Sometimes you just need a sounding board. Sometimes they need an opinion. Sometimes you're acting as a facilitator of a conversation between the founders, by the way. I mean, sometimes it's just being there. As I said, the most important element in adding value to angel investing is being there. Also, make sure that you have an allocation. The winners, and you'll know which ones are winning, they'll need follow-on investing. So leave some allocation within that investment side to double down on your winners. And that's very important, because you definitely want to be able to fuel the winners till they graduate from your realm and they go to institutional investors, etc. And there's a de-risking model and different players for different stages. So angel and angel networks and angel investing in the pre-seed funds like Nama play a role. Then the later stage VCs. Then you've got the early venture private equity, venture debt. So know your place in the totem pole, and know your place when you're going to pass the buck to the follow-ons. Because I'll tell you, in Silicon Valley, VCs pay a very close attention of who were the angel investors in which angel networks, because a bad apple, a bad angel can give the follow-on investors a very hard time and the founders a very hard time. Know that your life expectancy of engagement with these startups are finite. There will come a time where you will have to pass the baton to the people after you. If you had a board seat, you have to give it up. There's people beyond you that are deploying big checks, multi-million-dollar checks, that you're lucky if you're still friends with the startups that have become unicorn status, if they're taking your call. So setting the expectation and the right mind frame is very important per se. And make sure, as if you invest as an angel group, give a lot of confidence in your group yourself. Don't bypass your own angel network. So if you guys congregate 5, 6, or set up an official angel network, and more than happy to engage with Qatar, the development bank, or the fintech to help you with setting up an angel network and all that. Is don't bypass your own network. So add value to it, source deals to it, help the collective. Now, this is all from an angel investor's perspective. I'll just conclude, because I think, in the interest of time, I'll conclude on the startup side. Look, coming to your cap table is a privilege. So challenge the angel and make sure that whoever is coming on your cap table is going to add value. Believe it or not, it's easier to get divorced than to get somebody off of your cap table that are not adding value, and you only get one shot at it. So we love it when startups come to us and say, why you? Why Nama? Why the value add? By the way, I no longer angel invest in the region, because our fund acts as, as a pre-seed seed. So we, as I said, we kind of look like angels, but we say, don't get the answer from us, get the answer from our portfolio companies. And we give them a list and say, call them all. So know that every investment you make, you're building that reputation of being that value add investor. And that's your ultimate asset. That's your number one asset. The more value, it's one of those asset classes. The more you give, the more you're going to get back. And know that this is a reputation business. If you're, writing checks and you're being passive, you're being destructive. The ecosystem, the market will know, and people are not going to go to you, right? There are today angel investing. We see it in certain ecosystems. It's a fashion. People are collecting badges. There's going to come a time where the entrepreneur is going to ask you for a favor, ask you for adding value, etc. Know that you are being judged by this ecosystem. So make sure that you're available. Make sure that every investment creates a cumulative value add to your profile as an angel investor. And just to conclude, the best way to start is to write that check. So, and I'm always available. You can find us on Twitter, etc. But thanks so much for having me and for hosting us. And hopefully I gave you a kind of a glimpse on my experience as an angel investor in different geographies.
Thank you so much, Mohammed. I think it was really insightful for all the budding angel investors who would be looking for some investment in the near future. Thanks so much.
Thanks so much. Thank you. Bye-bye.
Next, I would like to invite Mr. Alex Fries. He is a partner at InnoQ. Raghav, if you can just change the slide. He's a partner at InnoQ, and while we are working in Qatar, which has a smaller ecosystem, I think it's very important and imperative for our entire audience to know how to succeed in a smaller markets with a very small innovation ecosystem. Over to you, Alex. Thank you so much for joining in.
Very much for having me, Qatar Development Bank in FinTech Qatar. My name is Alex Fries. I don't know if you see my face, because I see myself a little bit darker here, no lights of some kind. But anyway, it's nothing too beautiful to look at. I just want to introduce me very quickly. I am Swiss national from Switzerland. I've been living in Silicon Valley for the last 20 years, so I'm still there. I still live there. And I'm currently in Dubai, so I'm flying back tomorrow. Dubai, I came here for a startup event in Ras Al Khaimah, where I was a mentor and a judge. So I will talk to you today a little bit. I think about 15 minutes, so let me put that timer. How to succeed in smaller markets and innovation ecosystems. I can relate well to that because I did do startups in Switzerland while I was living there. I did a couple of startups there, and if you take Europe, each country is a very small market, so it's very related, can be related very well with Qatar and some other MENA countries. Next slide, please. But just to make sure, I really have highly respect of any entrepreneur that starts a company, and you know how difficult it is. The point I want to make with this slide is, please, if you believe in your idea, in your company, you need to just keep going and don't stop at anything. But it's very important, the passion that you believe in your idea, 1000%. Everybody will try to stop you in between. And I think Qatar Development Bank and FinTech Qatar are here to help you to pass through your friends that get nervous, to your relatives that prefer if you work for a large company where you can make a good salary, and so on and so on. So please, a very important point you need to take from today is passion. Believe in your idea or don't even start. Next one, please. Next slide, please. I'm going to skip this slide. I think my bio has been already shown. You can connect with me in LinkedIn. I've done multiple funds, and I will talk a little bit about the last one in this presentation. But as you can see, starting a company, regardless if in a small or mature ecosystem, it's very difficult. And even Coca-Cola, when they launched their first products, they had a very difficult time. So next slide, please. I highly recommend that you don't give up, and you got to take risks, right? So being in a small market, it's already a higher risk than opening a startup or starting something in the US or in Germany or France. But as Mr. Zuckerberg mentions here, the biggest risk is not trying. So I want you to take that risk and move forward if you believe in your product. Next slide, please. And just to show you why Silicon Valley is so successful, really, there's three key points that you need to take into you, regardless of how big your market is. One is taking risks, right? So we talked about that. Without risk, you will never know if your idea would have been successful. Second is speed. In the US, they believe, investors believe that if you have a good idea, there is no reason to grow organically, right? So there's no reason to overdevelop your products. In the US, and investors globally think you have a great idea, we will give you the money, and you have to run with that. There's competitors all over, and they will catch up eventually. And the last key word is flexibility. The way you thought the product and your strategy would work out, most likely is not going to work out the way you planned at the beginning. But the goal always stays the same. The goal is, be the regional market leader and or have the best products in the world for this or that vertical, in this case, fintech. The way you're going to get there, I can guarantee you, is going to change daily. So you have to be very flexible when you launch your products, when you start your company. So these are the four key words that you need to take in you. And I always like to repeat this, even though it may not fit to the topic. So passion, risk, speed, and flexibility. This is what makes Silicon Valley great. This is what you guys kind of implement in Qatar. Of course, it takes an ecosystem around them, which it seems Qatar Development Bank is initiating with all these initiatives. So it's getting there. You can go back to Switzerland or Europe, some European countries that were nowhere in the map a few years back. Europe has been, with the support of the European Union, has also been, now it's in the top of the charts, and so on. Next slide, please. I'm not going to go through the entire slide here, but again, I want you to make sure that you see how difficult it is to start a company, and you need that passion behind. This is how Airbnb started, right? The idea came about based out of Travis Bill, whatever his name, I forgot his name, but the founders being in San Francisco, which has very, very high rents. They couldn't afford their apartment. So what they did is put a mattress on the floor and they rented it out to another entrepreneur. And over time, they thought, oh, we are getting a lot of inquiries about this. So why don't we do with 2 mattresses, 3 mattresses, maybe a room, and then they start renting apartments. They were, if you can look at the bottom, it says they were rejected quite a few times by top VCs. So don't get disencouraged if you talk to investors and they say no. There are reasons why they say no. Doesn't mean your idea is bad. Most of the times they're overwhelmed with other deals that are more advanced or have better KPIs at that moment, and there's only a certain amount of money that they can put. But it's very important to use, so you can see that even the best ideas in the world get rejected. Next slide, please. The next slide is about Angry Birds. It's a gaming. The reason I wanted to show you this is because this company, which you may know, it's not in fintech, but it's in the gaming industry. As you can see, they almost died. They were pretty much dead. And they said, okay, let's sketch 10 more games and see what happens. Let's give it one more chance of success. And out of those last 10 sketches, Angry Birds came out, which, as you know, it's a billion-dollar success story, billions and billions actually success stories. And if you can read there on the left, on the bottom, it says there is no failure except in no longer trying. So again, passion, believe in your idea, regardless of you live in this world. Money is flowing to all different pockets nowadays. So it's a good time to start a company, but you have to believe and you cannot give up. Next slide, please. Next slide. Yeah. One back, sorry. So when you go to investors, regardless where you are in this world, the first impression is key, right? We get 10, 15 new ideas, new business plans every day. We don't have that much time to look at them all. So with time, we are more experienced and we can feel it that if this idea could be a success or not. But it's very important that the team presents itself first. When we invest in Silicon Valley, 50% of our decision is based on the team, right? In these companies I just saw here in Ras Al Khaimah, UAE, the team slide was the last one. They didn't tell us exactly where they worked before, which companies, what positions, if they have done other startups. That is very important. So bring that slide forward. Don't just put a picture of yourself and your name. Tell the investors who you are. What have you achieved and accomplished? Failure is okay. Failure means you tried it once. Hopefully you learn from the mistakes, and the next time around you're going to be faster, better, and you have learned. So that's very big, important. A market size is important. Unfortunately, Qatar is not the biggest market out there. Switzerland is not the biggest market out there. And countries like this, smaller countries, smaller ecosystems, you really have to look outside at some point. I mean, we like to invest. Investors love ambition in entrepreneurs. So you have to show ambition. You have to want more than just your local market. If that's all you want, maybe you look for, like Mohammed was saying before, just look for angel investors and some corporates to help you. But if you want to invest institutionalized money, you're going to have to at some point look outside your markets. We'll get back to that in a few minutes. So next slide, please. The next slide is about the market size. Again, I just mentioned this. We have smaller markets in our home countries, Switzerland, Qatar. US is one big market, same language, same currency. Again, Europe is very divided, different cultures, countries. So they also have a big issue in each of them. Unfortunately, the EU was able to kind of consolidate some markets and currencies, but they still have an issue when you're coming out of Switzerland or Austria. And expanding all over Europe, it's a big task. Different languages and cultures and so on. Next slide, please. Very important when you talk to investors is your unit economics. Make sure you know how to produce one unit of your product and you have all the costs in consideration all the way until the selling point, right? This is something it's missed quite often, how the unit economics, but this tells you, if you do it for yourself internally first, this will tell you if you will ever be profitable. Investors, for the most part in the US for sure, some in Europe, we don't really care about profits for the first 5 years of your startup life. We are okay if you lose money. We'll keep funding you as long as you are growing. So growth, market share is very important, but we need to make sure these unit economics are there. Next slide, please. When you're in a small market, I think the best thing to do is focus on a specific use case. I'm not going to call it vertical. Let's take fintech, but focus on one use case because offering a loan or micro loans, there's so many use cases for that. Focus on one. Do it right initially. Once you do it right, you can scale and grow fast. Next slide, please. Yeah, and whenever you present or you talk to investors, regardless where you are, you need to present the value proposition. That means how much better, how much faster, how much cheaper are you than what exists today? Very important. I want to know, are you 5x better, faster, cheaper, or 10x? In the US, they want 10x. In Europe, I'm happy with 5x and more. So you got to show this. I wanted to bring this slide just to show you how this startup presents it, but there's different ways. Are you saving me money, making me money, and so on, but and by how much? Next slide, please. And product, if you're a technical founders, this happens in Europe all the time. On one side, on the left side, you have the customer that looks at the product, or the engineers, the product developers. They look at the products from the top, right? This is a kid's carousel. You're looking at from the top, you see these beautiful heads of elephants and giraffes. Sorry, and then the customer, the user on the right side, looks at from the bottom up, and he sees only the butts of these animals. So make sure, and this is a problem I encounter in Europe all the time, very product centric. Make sure you talk to customers. Next slide, please. Yeah, so don't take advice from non-customers. Next slide, please. So coming to that, if you're in a small market, and this is the model of one of my funds, if you're in a small market, but you guys have amazing technology, if you are trying to escape that market after you have conquered your local markets, a good way is to incorporate or look for, in this case in the US, where the market is huge, and they have very good sales and marketing managers. So what we do, just so you know, we invest in the best tech in the world. A lot of the founding teams are technologists, and we mix them with American marketing and sales management expertise. So we try to combine the best of both worlds. So we bring investors from Europe, US, staff, and board members. Mix the board members. Don't have them all from your own country. That's not good either. You got to mix the mentalities. And the US is aggressive, wants to sell quickly. They don't care that much about the quality. In this case, Europe is only about quality. They're not in a rush to sell. So combination is the best. Next slide, please. And this is where the money is. It's the US, Silicon Valley still has a lot. Next slide, please. The next one is evaluations. Another reason why some of the European companies go to the US, because as soon as you land there and incorporate, your valuation goes 3 to 5x higher. Next slide, please. And Silicon Valley, the beauty there is, if you want to go there, 80% of all startups in the Western world are acquired by large US companies, and they all have scouts in Silicon Valley. So when I invest in a company outside the US, and I've invested in Jordan, I've invested in Europe, in India, I tell them, look, you have to open an office in Silicon Valley. All the scouts are there of all the world. And if you want to team up, it's usually easier. Find capital, it's easier. They're all there. It's like a small United Nations in one small location. So next slide, please. And this, when you have time, please look at this. This compares US as a big growth market, as a growth large market, versus European, in this case, European small market. So, and you can tell what I've been more or less saying now. You can see on one side how the US is aggressive, Europeans, and I'm sure in the Middle East, they're also very careful when starting their company. They like to go step by step, and so on and so on. So you can look at this later. You can always come ask me about specific, but I can guarantee you this is most of the world, when I invest outside the US, it's like the European version of the right side, you know, and I'm trying to change that, not fully to the American perspective, but combining those mentalities. Next slide, please. And I'm running out of time, but and this is a very important slide, because this is my next fund that I'm trying to fundraise. We're launching as we speak. It's called Digital Twins Capital. Let me tell you why this is so important. I've invested around the world. The entire world is building the same ideas, they're solving the same problems. At some point, it doesn't make sense anymore. So if you are a startup and you want to, let's say you start in Qatar, you find some angel investors, all good, but you can't scale, right? What can you do? Well, there's not much you can do other than potentially what we're trying to do is maybe you want to merge with a company that's doing similar stuff somewhere else in the world. And we will do that. So we will bring you together. You may be the winning company, the one that keeps the majority, or you may be the losing meaning there's no losers here. You may be the minority company at the end after you merge. For investors, this is great as well, because you invest angel money in companies in small markets, but they need to get bigger. They want to expand. So instead of writing off losers, and remember, we lose half of our portfolio, 50% of our portfolio goes to zero. With this model, we're trying to solve and save some of those 50% by merging them to other companies and keeping a piece of the equity. So it's a win-win for investors, local investors, and small companies and in small markets. Next slide, please. And, you know, there's nothing new about startups acquiring other startups. Next slide, please. I'm going to skip this. Important here is motivate your staff, give them stock options. They all want to be part of this dream. Next slide, please. And if you need money, a good way is corporate money. There's all corporates are getting involved in the game of investing in startups. COVID accelerated innovation and digitalizations, and they're all kind of panicking and they need to invest in startups. So next slide, please. Another good way for small companies in smaller regions with lesser ecosystems are to join accelerators, incubators like the ones that are being created in Qatar. But maybe you want to try after that an accelerator incubator in Silicon Valley or in Europe or somewhere else in Asia. And there is incubators for everything. The beauty, as you know, is they bring a network, they bring investors, they help you out. Next slide, I think is the last one. Yeah, and this is a slide from Silicon Valley. It takes 40 meetings to get your first check from a venture capital fund. 40. So if you're not passionate about it, and you will never pass 20 meetings. You will think, okay, I have an idea that doesn't work. Nobody likes it. They think I'm crazy, whatever. 40 meetings in Silicon Valley. Imagine if you are in Switzerland where there's only 12 VCs or 15 VCs. So you have to never give up. Next slide, please. And I better stop soon. Yeah, I'm going to skip why startups fail, you know, but next slide, please. I have 2 slides on this topic, you know, and I think Mohammed from Nama Ventures can also give you feedback on this. Next slide. Yeah, and these are some readings I want you to look into. It gives you some motivation on a daily basis. I would upload your companies in AngelList. It's a good database, gives you exposure. But as you can see on top, I said, make noise. This is the issue with startups in small markets. And again, Europe is what I know best, but in the US, it's not a problem because in the US, they're mastering marketing and sales. But in Europe, we have great technologies around the world, but nobody knows them. Nobody knows they exist. They don't make noise. You have to do press releases and papers and LinkedIn posts and on a weekly basis. You have to do this. The world is looking for your technologies, but you have to let them know you exist. Last slide, please. Yeah. So when you have time, I put 3 of these. It tells you more or less what investors are looking for, what you should not do, what you should do. So with this, I will finish. I think I went over my time. I thank you again for having me. And please connect in LinkedIn or send me an email. Thank you.
Thank you so much, Alex, for joining today. I think all the audience, everyone in the audience got some good insights around what has to be done from the founder's perspective and what should be done and what should not be done while they are looking for an investment. Moving on, we will be having the next session, which is a panel discussion. It would be moderated by Tavishi Singh, who is a senior manager at Ernst & Young. And while we have already heard a lot about the angel investment, let's go something much more deeper in what is happening in Qatar specifically. Over to you, Tavishi. Thanks so much for joining in.
Thanks, Sachin. First of all, I would like to welcome everyone. Thank you so much for joining in today. Great job by Qatar Development Bank and QFTH team to have this wonderful session. A quick introduction of our wonderful panelists here today with us. We have Tejinder, who's the founder 360 Nautica. We have Abdesh, who's a venture partner from Rising Ventures. And of course, Mr. Khalid, who's the founder and CEO of Els Labs. So just getting deep diving right into it. Tejinder, if we could start with you. So angel investors, of course, have an important role to play as providers of equity capital, as we've learned so far in this session as well. And hence, they form a really important role in driving the success of the startup ecosystem. So in your opinion, what do you think, how can angel investors support businesses beyond just providing the financial support? Would love to hear your thoughts.
Well, hi everyone. This is Tejinder, and I think Tawashi has given a very quick brief. I'll just straight away jump to answering the question Tawashi has put up. Well, what Alex said, I totally agree with him. As an angel investor, don't just dump your money into a startup. You love an idea, you love the pitch, and you think, okay, fine, I need to put some money out there. Don't do that. I think if you can participate in that in terms of being a mentor or a coach or opening up some doors in terms of growing the business, walking along with the founders. I think investing money to secure your money, you need to walk with them. So the first fundamental thing that I have seen over a period of time, most of the angel investors are putting money just because they feel they listen to a very nice pitch. Pitch generally takes about 2 to 3 minutes. In a 3 minute pitch and looking at a deck, probably you can't double your money or you can't look at returns. I mean, this is pretty much, I would say, a very wishful thought. So I think the first thing angel investor has to do is invest his time, his thought, his effort along with the money. That's the most important thing. Angel investment should be reformed as a thought process. I mean, at the moment, the angel investment is just about putting the money at the angel stage. I think this is one big reform in a thought process every angel investor should adopt.
Yeah, absolutely. I think that's a great thought. And this is something that we've been hearing across the session as well. So, just getting again to the startup side of it, and we have a lot of founders here as well today with us. Khalid, what do you think, in your opinion, is the right time for founders to approach this set of angel investors who can do beyond just providing financial support to them, to what Tejinder said?
Again, I think just building on even what Muhammad earlier said and Alex, in terms of basically doubling down on the network and the engagement and how the angel investors can contribute. So to answer your question about when should entrepreneurs engage, I think as early as possible. Like, as an entrepreneur, you should tell everyone around you about what you do. That's like maybe half of your job, other than just building the company. You want to tell people about what you are doing, because it's a way to know if what you are doing makes sense or not. It's a one dimension of talking to customers one way or another. So talking to people and telling them about it, it will even harness your ability to rally people behind you and selling your vision and trying to understand what are your blind spots, because you can easily have your blind spots not taken care of, basically. And the sooner you can talk to people and build those relationships the better. According to one of my mentors, who said you should be always raising, but not always taking money. And that's kind of a motto we've been taken very seriously, and telling people about it as we go along this journey. Even when entrepreneurs come and speak to me, that's kind of my advice to them. So as early as possible, as many people as possible, you should be talking to and pitching to, because this helps you and refining your pitch, refining your story, and even understanding if you have any blind spots that you have to watch out for.
That's great. And I think you've touched upon a very important point, right? Angel investment is one coming at a time which is very important in the startup phase. It's very early on. At the same time, we also have to keep in mind the risk associated with it. So Avdesh, would love to hear your thoughts around the fact that angel investing in general, generates a lot of sizable return on investment, but at the same time is fraught with risks. So what are your thoughts on how the Qatari angel investors, how can they approach investing in terms of some of the best methods, and potentially how can they look for the possible pitfalls that new angel investors may face? So your thoughts, please.
Yeah, so thank you. And essentially, as some of our speakers have spoken before, angel investing is a very high risk, asset class. Just about 6 to 7% of all angel investments give sizable returns. So if you are new to angel investing, so don't get blinded by looking at the Facebooks or looking at, what some of the, top angel investors globally have got, but look at those 99% of startups who failed and those 93% of investments who've not generated returns. So I think that's a very important piece. So if you're new to angel investing, I think work with a group, follow a lead investor. I think learn the tricks of the trade, understand how do you analyze these startups, and look at, as we spoke earlier, the TAM, SAM, around the startup. So being in Qatar, definitely, the parameters are very different because you're in a very small consumer market, and hence you have to size that even though you might have a great idea, the fact that you have a very small consumer market, or if a startup doesn't have a clear plan to grow out of Qatar into multiple markets, so you see a potential risk. You look at analyzing financials, look at people. I think the fundamental, when you're very early, and when you look at a startup who's just starting off, I think the key criterion is the team, the people, and then your own gut feel about, will these people finally succeed and give you good returns? But angel investment is something very personal. The way I look at it is there are different angel investors with different investment styles. For me, because I run a technology company and we have a very strong go-to-market, so we look at startups, who are collaborative and with whom, we can go to market together. And then there are investors who look at particular categories they understand. Like someone, who understands clean tech, or someone's looking at social impact, or someone's looking at fintech because it comes from a financial background, might have a deeper understanding of that category of a startup who plays in that category. So I think these are, very important steps. In Qatar specifically, we don't have a lot of angel groups. I know there's Tech Angels, but regulatory hurdles are there. And then you don't have crowdfunding and other platforms. But I think the ecosystem, is building up. QTB is actually doing a great job, and other incubators in the country supporting and building a great platform for startups to come in. If you also want to start, look at some of your, look at AngelList, look at some international SPV-based platforms. Go there, research some platforms, do small ticket investments. So if you look at a spread, you have to look at your investments as a portfolio. You can't do one bet, and eventually you might be very confident, but you have to spread your bets or do $20,000 tickets over 10 or 20 startups, and then you might get a winner. Right? So it's about just like you manage your portfolio when you do your investments or mutual funds. So it is very much. You have to have an investor mindset in how you approach, how you. So these are my bets. High risk, but eventually, once you learn your bit on how to pick the winners, definitely they can be.
Thanks, Adish. I think that was very insightful, and you kind of touched upon a key part of the success of all of it, right? The community and the ecosystem. So just, getting to the next step in terms of wanting to know more about that part. Tejinder, what is your thought around, this entire community and ecosystem wherein we also may have organizations who are supporting angel investors, and essentially acting as a bridge between investors and entrepreneurs, not necessarily doing the investment decision themselves. So how can one approach such organizations? What kind of a role do they play in driving this entire angel investment ecosystem?
So, I mean, just make me the question a little more clear. Who are you talking about approaching these institutions? Are you talking about the startups approaching these institutions? Or are you talking about the angel investors?
We can actually talk about both, right? Because there are organizations who can support both the ends of the community. So I'm happy, and we do have the audience in both ends. So happy to hear your thoughts on both.
Well, I would, rather than addressing it this way, I would probably put my piece of advice on what startup looks at. Basically, a startup should be very clear what stage are they looking at the money. Let's say they're looking, for the sake of discussion, we're saying angel side. When they're looking at the angel side, are they looking at debt? They're looking at equity. They're looking at a short term, long term. So this is very important for a startup to identify that what exactly are they looking at. Angel investor himself looking at the institutions probably would not make much sense, because he's predominantly investing in his own capacity. It is more to do with his own ecosystem. So for example, Avdesh is an angel investor, for example, and he has already invested in 3 startups which are predominant around fintech. Now it is very likely that the 4th investment will come around the fintech, because he would want to stay in that same stream. He understands the stream very well. That is pretty much exhibited, and he would also try to leverage the 4th startup from the first 3 startups. So there would be some cross sell, upsell, interlink between these 3 startups onto the new startup, 4th one. So his portfolio, he will diversify within that vertical, which will make more sense to him. So investing from an angel side is very personalized based on what we are looking at. For example, when we invest from 360 Nautica, we look at our own digital ecosystem, which predominantly has brands from B2B, digital and retail. So we are pretty much diversified, but still we would not look at manufacturing, we would not look at construction, we would not look at anything which is beyond our thing. So angel investor at this stage picks up a startup basically which works for him in terms of his own thought process, his own framework of the thought process, and the portfolio that he's trying to carry over. From the startup point of view, as I said, when he's looking at the money, we all know the color of the money is same, but at the end of the day, the startup would actually have to distinguish that, does he want a debt? I mean, does he have enough that he can raise a debt if he gets a debt, or he gets an equity? Does he want to, hive off his equity shares, give the stake to others in the company? Would he want to go to the angel? Would he want to go to the group of angels? So it totally depends. I mean, approaching the institutions or angel, at the end of the day, you're talking about the proof of concept that you have, the business that you have. So the business or the model, the growth story itself will talk about it. So I don't see a very, I would say, a defined approach into it. I would say at the end of the day, the more important decision every startup has to make is that they want to go a debt route or they want to go the equity route. What is the route they want to go? If I have a startup which has a lean capital requirement, for example, I'm talking about a digital platform. Let me just, because most of the people will say, okay, fine, we have to go to the equity. Who will give us debt? But that's not the case. Sometimes you have a digital platform. You already have developed a digital platform at the seed round. Digital technology, if you have done it well in the first place, doesn't need much of enhancements except for the routine this thing. So there could be lean investment, and you are only a marketplace which is doing fantastically well. For example, I would say a marketplace on beauty and care products. So people are listing their products, and they're on the other side, the consumers buying the product. So what are you managing? You're basically managing the technology platform. So your need for the money, you don't have to hive up the equity. You could actually pledge your collections to the bank and raise some debts in this thing, or go to an angel investor and raise a debt. So that could be done. But where you have a need for a growth capital which is running, let's say $4, $5, $6, $10 million or 10 million reals, which is very difficult to raise on a debt because you are very new in the early stages of the business. You don't have those presentable balance sheet. Then I think equity is the only option that you are left with. So it totally depends on the startup, what they're looking at, how they're looking at, what is the business model, how they can leverage it. I would say that this is the decision that startups should make.
Thanks, Tejinder. I think fair points, and would love to also understand, Khalid, from you, your thoughts on any mistakes that you would have seen startups making while trying to raise angel rounds. So any advice for them, for the founders over here in the session today?
Yeah, before I jump into that, in terms of mistakes, I would love to comment on the scene in Qatar and just share our experience. We've raised close to close to $1 million USD from angels, and I definitely agree with Tejinder and Adish in terms of like what is the state today in terms of the ecosystem here in Qatar and the angel investment scene. And I would say it's definitely at the grassroots level. From my experience to the entrepreneurs on the panel and to the investor, it's been educational for all of us, to be honest. Again, we were able to rally almost $1 million USD in aggregate. And it involved around 15, maybe 13 individuals contributing between 25 to 100K USD, and then in multiple rounds, basically increasing their participation. And then in my experience, and we're talking about using very high standards in terms of on the global standards and tech investments. So we use safe, simple agreements for future equity to close these investments, and it involved a lot of education, to be honest. So to the panel's point, one is okay, what kind of equity investment? And we are talking about specifically angel investments in the space of technology, where there is high risk, high return. So educating the investors on that element, and it goes both ways, as I mentioned, even for the entrepreneurs deciding what kind of money they need and how does this make sense in the longer term story of the startup. And then the second is, okay, what is the investment tool that we can all agree on that makes sense? And our context was the SAFE. And again, just going through the document itself, understanding the structure of the agreement and how does that kind of bring everybody on the same page, and basically execute the investment deal on a very high standard that basically allows for future financing rounds without creating any suspicion or any documentation that might not fit the narrative of, again, venture-backed or venture capital investment route for financing the company. So these were the key kind of elements in our journey that I would advise and encourage entrepreneurs to look at it. At the end of the day, it's a journey, and especially in a market that is developing as we speak. Mohammed earlier spoke about the QDB's role in capacity development, and this is definitely a space that we've experienced ourselves in terms of building capacity with our angel network. They don't come again from organized angel networks. They are more or less individuals who are interested in tech. They are trying to tap into this asset class, and it's been definitely a fantastic journey for both of us. And I'm looking forward to the exit that would create multiple millionaires, hopefully within Qatar and beyond the region, and hopefully that would even continue the flourishment of the ecosystem and the investment scene. As for the advice, I think I would double down, just looping back to your question. As for the advice, I would highly advise, again, entrepreneurs to speak to the angels and build the network and make the investment deal, because at the end of the day, it's also a privilege. It's a privilege for the investors to get on your cap table. If you're doing something great, it goes both ways, and it's a space of your reputation. So it's important to maintain the quality of the network and the consistency of how you communicate and how you deal with your potential and prospect investors. My advice, again, is to find somebody who can help. In our case, again, for those who don't know, we are building basically the food cooking robots of the future. We are technically like the Tesla of autonomous cooking. That's how we like to identify ourselves. And luckily, one of our angel investors made an introduction where I got to meet one of the top CEOs of meal kit companies just to discuss potential partnerships and collaboration. And that again came from one of our angel investors. So that kind of quality networking that you can bring and quality help and support you can bring on the table is very critical. And that would be my advice to the entrepreneurs. And again, in addition to understanding the context of grassrooting in a market like Qatar.
Thanks, Khalid. I'm sure the founders learned a lot. Sorry, Tejinder, you had something to add?
No, I'm fine.
Okay. Yeah. So I think, Avdesh, you earlier spoke about, having different investment styles. Just adding on to it, what are your thoughts on, co-investment vehicle? Is it popular in the Qatari ecosystem? Any thoughts on the crowdfunding platforms and other vehicles which support angel investors to identify the various investment opportunities?
I think co-investment is getting popular. We don't have a lot of investment clubs or groups. Only ones I know about is the Doha Tech Angels. But yes, angel investors do come together, when there are deals, and referrals work, especially in a country like Qatar, where if you have a good reference, it can help you get to people who can potentially invest. But the ecosystem is building up. I think the big play is that you have 4 or 5 key government incubators or government supported incubators in the country. So right from QDB, QPIC, we have DIC, we have QSTP. So all of these incubators are a tremendous platform for the startups, as well as, the investment fundraising programs they're running. So I've been personally to the QDB investment events. I think they're doing a great job. The DIC has something called Make the Deal. We have other events happening in the country. So I think these platforms are very key because they give you visibility to startups in country, deals which come out in the country, and very early deals, because most of these incubators are early ideas. They're just coming in, and these are not typical accelerators, but incubators. And so that's key. But eventually, I think the regulatory scene in the country, has to take a big leap. Only regulatory aspects I'm aware of that QFC has an angel club mission. There are, there are other accredited investor rules from QCB, but otherwise, you don't have a classic venture capital or crowdfunding platform regulations, which have to come in. And eventually, if you look at platforms like crowdfunding, they help you get to money faster. They give a lot of visibility to startups. Even for angels, you can give them, regular deal flow and visibility for deals in country and across the region. So I think for sure we need a lot of revamp. We need ecosystem to build up, and I'm sure QDB is doing a great job. And with more progress, and more clubs and more networks, in the country, I'm sure startups can benefit from all of them.
Absolutely, I think in a building a growing ecosystem like Qatar, having the support of regulatory measures and policy measures is very important. So Tejinder, what are your thoughts on that? Would you like to throw light on any recent policy developments or government measures that may have happened in support of driving business angel investments, or anything that you feel should happen, and any thoughts on that?
Well, the first thing I would say has happened is that we have started focusing on the specific verticals. That's the great thing that has happened. So we've got the QST Qatar Sports Tech, which is focusing only on sports. We've got M7, we've got QFTH focusing on the fintech. So I think the first of all, from the angel to develop the angel system or angel ecosystem in the country, the first and the foremost thing, the wonderful thing QDB has done is he's created a vertical specialization with respect to creating the clusters of the specific startups into fintech and into sports and other things. So I think that's the first great thing that they have done, and I think this brings in a lot of focus. Like I said before, also if someone is just focusing on fintech startups, I would probably be with QFTH only, and I don't want to look at the other startups. And what happens is that when you are at a QFT, you are not only the one at the QFTs, that all like-minded investors at the QFTs, like-minded startups, like-minded mentors, like-minded coaches. So the whole ecosystem actually starts developing around that specific vertical. And that's where the whole growth story starts. So when we say Silicon Valley as Silicon Valley, why there is Silicon Valley so much? Because predominantly the startups around tech were grounded over there. I mean, you look at any other successful ecosystems across the world, whether you look at India as a market, you look at Dubai as a market, you look at Europe as a market, specific focus on a vertical or creating a cluster is so important to develop an ecosystem. We're not talking about the investors and the startups alone. We are talking about everybody that matters in the ecosystem. We're talking about mentors, we're talking about coaches, we're talking about the connects that we like Abu Jassim said, Khalid Abu Jassim said, that if a startup invests into a startup, it's not about getting the money, it's about connecting further. So you come across people who will value add to your business directly, indirectly, in so many different ways. So I think first of all, the first step that QDB has taken with respect to creating the clusters is, I think, fantastic. Initially, we had all the startups being featured in QBIC and DIC. Probably that was probably something that we had to get away with that and get more specific into the focus cluster areas. The other thing that we need to focus here is we need to actually bring all the angel investors together. So probably it's not a bad idea to create a forum, or you create a regulatory, I would say, structure or a framework where an angel investor comes and registers himself with an intent of capital that he wants to invest. So if, let's suppose, if I have to give an example, why don't we create a framework where we have got, let's say, 30 angel investors from Qatar who come and register in their framework, and they could be cross-border also. Why just Qatar? There could be investors interested from Bahrain or Kuwait or Saudi or anywhere else. They register into it with an intent of investment. So I would say that, for example, there are people who are doing an average investment of $1 million in a year. So if I have 30 investors, I still have a 30 million intention parked on that framework to showcase to the startups. So on the other side, what happens is that the startups also get very excited and encouraged that, okay, fine, there is a window that I can actually showcase to. These are and out of that, again, we can start framing it out. We can say, okay, fine, out of these angel investors, 30 angel investors, there are 7 who are very interested in fintech. There are 10 interested in sports tech. There are, let's say, the others interested in A, B, and C vertical, and so on. So that framework will make a lot of sense for the angel investors to not only come together and showcase it as a size, but also we would know that where exactly the interest of the angel investor is going. So you would know from that framework that there are 50% of the angel investors only walking behind the fintech. So this is something that we need to really focus on to bring more fintech startup, because the investors are liking and they want to do more investment into the fintech. So, and then again, further trickle down to who is interested in fintech in, let's say, payment systems. The people are interested in blockchains, the people are interested in something else. So, I can start. So once I build the framework, I can go from macro to micro and understanding the genre of the investors into that system, genre of the startups into the system. And then around that, I think the whole ecosystem will develop over a period of years in a most optimal manner.
Absolutely. I think you touched upon very key points over there. I think one last question from my end, and this is, for all 3 of you. What do you think are some of the key success factors for both the angel investors and startups to really make this a success in terms of, one, getting the angel investment and obviously leveraging it to its full capacity? Maybe Khalid, you would want to start off with any experience that you would have seen, or any other community or region that you would have seen do wonders with it.
Yeah, I think, again, finding the one, you will get a lot of no's, to be honest. Like, as you pitch, even as early as angel investing, you will get a lot of no's, and you just need to keep at it, to be honest. I think I did more than 100 plus emails, from cold emailing, all like intro meetings, and I've got so many no's. But again, as I mentioned earlier, when I answered the first question, is like when you ask like when should I talk to investors, I think it takes the same kind of idea of practicing. Like the more you talk, you should look at this as a practice, as a way, as a vehicle for you to get some feedback and understand if there are any blind spots, if there are any misalignments in terms of expectations and what the investors are looking for in terms of traction, in terms of product maturity, in terms of team composition, etc. So that would be maybe my key kind of advice. There is so much we can talk about, but I don't want to take all the time here. But my key advice would be just focus on the journey, focus on learning. You'll get a lot of notes, so keep talking, and obviously listen too. Listen as much as you talk, so that you can really make it.
Absolutely. No, that's very fair. Abdesh, what about you? Any backing thoughts for this?
I think, as I said earlier, as an investor, I think try to learn how to pick the winners. That's very important. And if you're new to the game, work with angel investors as lead, work in groups. So build good deal flow. That's very key. I think you need to learn how the game works and then be able to invest rightly, as well as build a portfolio. I think because it's a high risk asset class, you can't bet big on one or two startups. So have a portfolio, have 8 to 10, 15 startups in different areas, and startups whom you understand the business model, do your research, you do due diligence and invest. So I think that's key for investors. For the startups, I think network and pitch, as Khalid said earlier. I think your success rates in being able to close money are fairly low. So you need to try harder to reach network, work with some of the incubators to be able to reach out to potential angels. And I think, yeah, if you keep trying, you'll be successful. Yeah, so that's my 2 bits. Thank you.
Perfect. I'm just conscious of time. I think thank you again to all 3 of you for a wonderful session. I'll hand it back to Sachin and the QFTH team for any parting questions that they may have.
Thank you so much, Tavishi, and all the panelists. I think that it was a really wonderful session. I have got a few questions on the chat. One was, I think, primarily on the risk side of it. We all understand that this is a really risky asset, and given that we are working in a small economy, what are the key measures that an investor should keep in mind while they are considering angel investment from covering the risk perspective? What do you think? What should be the first thoughts in his mind while given he's investing into something risky, but he of course wants to get something out as a return as well? Alex, if you would want to cover that.
Yeah, I mean, I think it has been mentioned that angel investment is risky if you don't have a portfolio approach, and there's so many risks which I unfortunately learned the hard way from not doing enough due diligence when it comes to the financials of the company, or also mentioned at the beginning by Mohammed is the prior investors. There may be a early stage angel that has crazy terms in his or her term sheet, which will screw up the entire company going forward. So that's very unfortunate. It happens all the time. But other than that, the beauty of investing as an angel is that there is not really much there to double check, right? So if it's a technology company, the product's going to be very early. If it's a services or consumer product, you can check it out yourself. So you really have to focus more on the legal aspects and financials and the people working there.
Thanks, Alex. And maybe Tejinder, in case you can cover something from the MENA region perspective, given it's very dynamic and it's evolving very fast. How should someone be really acting in this space, covering again the risk element of it?
See, I think risk is the DNA of this game. So the risk will always be there. If we say we can insulate an angel investor against the risk, we are not saying that correctly. Then risk will always be there. Now, what angel investor should look at when it goes to the startup is something that he needs to understand the business. So just putting the money just because He saw a 3-minute speech and he feels that, okay, fine, and everybody was clapping about it. And in the past, they have raised some money at the earlier rounds, and it makes sense. Then you are purely investing for a speculation. So if you are purely putting your money for a speculation, then speculation can go either way. I mean, it can go down, it can go up, which usually happens. So I would suggest that angel investor must look at the genre of the business. He understands the business, he knows the market. So when you're talking about the MENA region in particular, I mean, digital products or digital startups that are evolving around, they're evolving because they feel that they're in a unique space, but there could be competition coming in. There could be someone knocking at their door and tomorrow, giving them run for their money. So all of those factors, there are multiple factors that an angel investor should look at. And the most important thing an angel investor must look at is the DNA of the founder. I mean, is the founder good enough to carry the story that he is telling everyone? Is he good enough to make it big? Is he good enough to take it to a substantial size? Because if as an angel investor I look at that I will invest in angel series and I will exit at series A, probably I'm only looking at speculation. But if I have to look at the multiplication of my investment, then definitely my 2 cents of advice is that we must understand the business. We should be able to contribute to the business in one way or the other, walk along with them, understand the business, meet them frequently, try to make them grow, help them out. All of those factors are very important for an angel investor to make sure that his capital will give him return, or at least give him the best return possible. Of course, the unforeseen can happen in any business, and so will happen over here as well. But in all fairness, if I have to say, if an angel investor can invest his time, his effort, his intelligence into the business to support the founders, beside his money, then I think that's what the angel investor should look at. I mean, he should stay away from the speculation. That's the most important thing.
Thanks, Tejinder. I think that really summed it up all, and the key points specifically which all the angel investors and maybe from the founders' perspective as well. Thank you so much. And I would like to thank all the panelists and the speakers that have participated and taken their time out for this amazing session today. Before we close this session for today, I would just request everyone who's interested into our programs, primarily into the incubator and accelerator programs. The applications are open. We'll keep the slide on for a few minutes in case you would want to look at and try and understand more details about the program. You can definitely visit our website and do apply for wave 4 of our programs. Thank you so much once again for everyone who have joined the session.
Thank you, everyone.
Thank you.
Thank you. Thank you so much. Have a great one.
Thank you.
Thank you.